So the general theme from our macroeconomists and our strategists, so Jared Minack and Steve Roberts, was to keep exposed to companies that are earning money offshore, predominantly in the US, but also in parts of Asia that are still doing well. So a couple of those stocks that relate to that strategy have been picked. So one of them's been SEK, that we've owned in that portfolio, in both the concentrated portfolio as well, in the core portfolio as well as in this ultra concentrated portfolio. And that's doing really well because it's now equal number one in the job placement market in China. Plus it's also in South America and Brazil, as well as the dominant position that it holds in Australia. So that's a typical example of a company that's benefiting from sort of developing markets growth, Asian growth, and Australian growth. That particular stock we've owned in our core strategy run by Tim Reardon, that's basically been a really good stock in the portfolio, but it's one of our top 10 or 11 picks, and so it's right in there in the mix. We see capital growth continuing as they expand further in Asia. We see capital growth out of their Latin American investment, and we also see unemployment rates gradually coming down in Australia over time, and more job placement off the back of that, albeit at a slower rate than you would expect out of the other economies. So very, very happy to own that as one of our top picks. About 8 months ago, we included Caltex into the portfolio, and we've included that in the Ultra that we've been running now recently. So that's going really well. That's been a story of the leopard changing its spot. So going from really a refining business to more of a marketing and sales business and a distribution company. Obviously they've got the relationship with Woolworths through the Caltex chains, and we think they're going to maximise that opportunity. In addition to that, they've got extremely strong growth out of their special fuels, which are priced very well for Caltex. And also they've done some great work on diesel, a really great product which is adding additional mileage to people's fleets of diesel, be it farming, mining, and just generally in the marketplace. So we did a lot of research on that. Tim Reardon's our oil and gas analyst, as well as runs the core strategy. And his basic view was that this was a company that was going to have some significant uptick in growth off the back of what they were doing, and then cutting their weighted average cost of capital, which means that they're going to be able to pay a higher dividend. So not only was it one of our best picks in the core, which was that one I told you about before, which runs maximum sort of 35 stocks. It's also just gone into the income fund because we identify in the future that it's going to pay higher and higher dividends. So it's going from a couple of percent now, dividend payment, to roughly 4%, and it's got about $1 billion of franking credits up its sleeve. So it's entered that portfolio. On the basis of that, we've also got it in the Ultra as one of our top 11 picks at the moment.